As you know, Finance Watch was created from a call from many elected officials from all political horizons, saying that in the field of financial regulation, also there was a need for balanced arguments in a normal game of checks and balances inherent to democracy. I feel that when we will be discussing technical issues today, we have to bear in mind at all times that behind these technical issues, there is a fundamental economic, social, and political dimension. This, certainly to us at Finance Watch, is essential. In the spirit that I was just describing, a Finance Watch event is always about a diversity of opinions coming together, about different people coming from different horizons to confront their views so that the debate can make progress. Finance Watch event is never a sectarian event where people sharing the same opinion meet to congratulate themselves for sharing the same opinion and then walk away without having really contributed to the debate. A Finance Watch event is always about what we're going to have today, what we're going to do today. That is a diverse group of high-level experts confronting their views in a respectful way, with a view of making progress in the debate and contributing in the most constructive possible way to policy making. As you're all well aware, Finance Watch has a very fundamental belief when it comes to financial markets. They should serve the simple purpose of making the supply and demand for capital meet in a fair and transparent manner with a view of serving end investors and corporations. In other words, financial markets, and more generally finance, should be about investing and not betting. Financial markets have grown unbelievably complex, and looking at all this complexity, one sometimes wonders whether financial markets are still effective at serving their purpose, i.e., as I was just saying, serving investors and corporations, or only an efficient way of for a relatively limited number of players of playing the market and benefiting from it. As we know, MiFID is a particularly topical topic at the moment in this part of the world. We're lucky to have with us this morning two particularly high-level representatives of the debate on MiFID. We have Nadia Calvino, who's Deputy Director General of Financial Services at DG Markt at the European Commission. And Nadia has played and is playing a key role in many pieces of financial regulation, and in particular, among other things, MiFID. So her views on state of the debate will be very important. And we'll also have, very shortly, in a few minutes, Markus Ferber, who's a member of the European Parliament, as you know, and MiFID II rapporteur. Let me give them, on your behalf, a very special thank you for having accepted to share with us this morning as an introduction to the technical debates that will come after their views on the current MiFID situation. Very briefly, allow me now to use three little histories to spell out what is at stake in those talks. Nearly 75 years ago, in December 1938, the US Commodity Exchange Commission implemented the first speculative position limits for future contracts in wheat, corn, oats, and other essential foodstuffs. These limits served farmers and consumers well for many decades. Today, food shortages mean we're looking at this topic again and asking if we have the right tools to ensure a balance between speculation and hedging that works for society. This will be the subject of our discussion panel this morning. Second little story is actually exactly 25 years ago this month, in October 1987. Those of us old enough to remember saw a global stock market crash that became known as Black Monday. I can share a personal memory. I was actually a trader in London at that time, and we all felt it was the end of the world. We've learned a few things since then. But anyway, the Dow Jones Industrial Average lost 22% on that day. At the time, some people blamed it on program trading, some others on excessive speculation. We can see that the debate is still on. Then, as now, markets have undergone a period of rapid technological evolution without corresponding leap in regulation. Then, as now, They were highly profitable financial innovations whose wider consequences were little understood. This will be the topic of our discussion panel this afternoon. The third little story is more recent. On this day, 5 years ago, in 2007, US authorities created the Hope Now Alliance to help homeowners repay their debt. This early response to the subprime crisis was needed because the US financial system, layered with adverse incentives and leverage, had gone berserk with mis-selling of mortgages and mortgage-backed securities. In MiFID, the topic is with us again, in a lighter form, with the EU proposed ban on inducements. I don't know if our keynote speakers will be able to comment on that today, but we will be looking with great interest to see if a recent agreement to drop a proposed ban on these adverse incentives will be revisited in the weeks to come. MiFID is a chance to learn from the past and to bring to the future of markets back to their core purpose, allocating society's resources and managing risk. Before I hand over to our first keynote speaker, let me say again, thank you for coming. I'm sure we'll have a fascinating day, and I encourage you to join in the discussion and, of course, in the Q&A session that we'll have after each intervention.